Welcome to Leaders in Lending. I'm your host, Ed Walters. For this episode, I had the pleasure to sit down with Simon Darchis, Head of Partnerships at Finwise Bank. Growing up in France, Simon shares his perspectives on the difference in financial services between Europe and the United States. In addition, he goes into depth on how he approaches selecting and managing fintech partnerships in today's regulatory environment. I hope you enjoy his perspective. Now let's jump into the episode. Welcome, everyone. I'm joined today with Simon Darchis, Head of Partnerships at Finwise Bank. Simon, hello.
Hey, Ed. How are you?
I'm doing great. Thank you so much for joining me today.
Yeah, thank you for having me.
Great. So, the first question that we always like to ask on these podcasts is really folks' journey in financial services. So as we'll talk about your role here in a second, but can we start kind of with you giving a summary of your journey in financial services and what got you to the head of partnerships role at Finwise?
Yeah, absolutely. I mean, my journey in financial services was somewhat of an accident, if I'm being perfectly honest. I was born and raised in France. I decided to move to Canada when I was 16. The reason why I did that is that I really wanted to become a doctor. And I figured that if you finished high school in Quebec, you could go straight into med school right after high school. You didn't have to get a bachelor's degree. So that's what I did. Finished high school in Montreal, ended up getting into the medical program that I wanted. And I really, really, really hated it. I was miserable for the first semester of med school, hated the way it was taught. I felt like I just had to learn everything by heart, didn't have to use my brain. So I kind of had to sit down and figure out what it was that I wanted to do for the rest of my life, which is a really tough question to ask a 17-year-old that's 3,500 miles away from his family. So kind of figured I was always a geek, always really into technology, always loved to learn about, the economy and global policies and how it affected the lives of citizens. So economics made a little bit of sense. And then what's economics without financial services, right? So that's how I kind of decided to study comp-sci, finance, and economics, because I decided not to make it easy for myself whatsoever. Did that, and my summer of freshman year came about. Really wanted an internship, didn't feel like doing nothing over the summer. So I ended up getting a summer internship at a bank that no one had ever heard of, that was based in New Jersey, in the suburbs of New York, that now became an industry name, and that's Cross River, right? So spent the summer there, learned about peer-to-peer lending, because that's what it was called at the time, right? Marketplace lending wasn't terminology that we were using. Spent the summer doing that. And, at the end of the internship, I kind of went up to the CEO and was like, hey, now that I've started working, kind of want to keep working. Is there anyone that you can introduce me to in Canada where, I could keep working for during the school year? And that's when he offered to fly me out to New York every year, every week. It wasn't every year, it was every week, going back and forth between Montreal and New York. And that's how I became a full-time intern of Cross River, and how I saw the industry pop up, right? We went from marketplace lending or peer-to-peer lending to what is known now as marketplace lending with institutional investors, to crypto payments, cards, deposit sponsorship. So had a really, really fun time looking at this industry kind of be born from nothing, right? Graduated, decided that I wanted to try the more traditional finance route. So went to Merrill Lynch for a little bit. And honestly, it was boring. I'm not gonna lie. You go from fintech to this multi-century old institution, and you kind of feel like you're missing out on the cool stuff. So quickly went back to fintech, and that's when I joined Finwise. I originally joined Finwise to help stand up this new business line. I think I was employee number 19 when I joined Finwise. It was a super tiny financial institution. I think at the time we had $13 million in capital, barely over $100 million in originations every year. Now we're $117 million in capital, over $1 billion in originations every quarter. So really saw tremendous growth at Finwise. evolved with the company. At first the focus was on marketplace lending. We always had this understanding that we wanted to grow past marketplace lending and start sponsoring payments and cards. But honestly, MPL was pretty successful, right? And took up a bunch of our time. So as interest rates started to rise and origination started to drop, we decided to take a beat, figure out what it was that we wanted to do long term in terms of fintech, and now we're growing in all directions, in all fintech directions. So it's really fun.
No, that's a great story, and I mean, definitely, you know, that willingness to zigzag, right? Starting with, you think you're going to do one thing, and many of us are in that same spot, right? We think this is what we want to do with our career, and then we get into it, and we pivot and continue to ride that. So you have an interesting perspective, as you talked about. You didn't start in the States, and so you have some views, I would imagine, on the differences of how financial services work in
Mhm.
Europe as it compares to America. Could you share some of that perspective, or some of the differences that kind of stand out to you that occur?
Yeah, 100%. And I think, most of the differences between the American market and the European market stem in cultural differences. We always think, Europe and America, two regions of the Western world, they're kind of all the same, right? But we live fairly differently as it pertains to financial services and money management. For instance, the American economy is very much driven on debt, right? Whether it's commercial debt or consumer debt. It's a fun little tidbit, but in Europe we have this stereotype that for every dollar that an American earns, he's going to spend three. So the difference has to be made up somewhere, right? In Europe, you don't have lending as widely available. Credit cards are very unknown. They exist, but they're not very much used. Installment loans, same thing. You'll get a personal loan if you want to do home renovation, or if you have extremely large expenditures, but you're not going to use a personal loan for a shortfall in budget. And we're very much taught that at an early age. I can remember my parents telling me, never spend more than you earn, and make sure that you're building, a nice little piggy bank. So coming from those cultural differences, fintechs just grew in different directions in America and in Europe. And I think that's why when you look at the fintech industry, the first subsector that really popped in America was the lending space, right? Especially that it was right after 2008. No one was lending anymore, very hard to get a loan. In Europe, the sector that really popped was neobanks, right? It was transactional tools like cards. It was almost Venmo-like companies, right, to facilitate peer-to-peer payments. But lending didn't take off and still hasn't. As I said, I think it stems in the cultural difference. I think it stems also in a difference of data being available. In the States, even in Canada, we have the credit bureaus. We can easily make an assessment of the credit quality of a customer, and all of that on an automated basis. Most countries in Europe, with the notable exception of Germany and the UK, don't have credit agencies. So if you're to apply for a personal loan, you do it at the branch of your bank that you normally go to, and you go through manual underwriting. We are starting to see an effort to create open banking in Europe that is actually in some regards a little bit more successful than it is in Europe, because it is created by the financial institutions and not by fintechs. But that's all you get. It's access to transactional data. You don't get that holistic view of how a customer may have performed on their past debts. And also, they don't get a lot of past debt. So you have that difference, and that's why the fintech sector just evolved differently. And then you also have a difference in terms of how business or fintech business is done in America and in Europe. In America, in order for a business to scale, generally they'll create those famous bank partnerships, right? It's very hard for a fintech to get a banking license. We've seen a few, right? They've acquired banks, they've gotten de novo licenses. In Europe, you don't have that concept of bank partnerships. Fintechs very much become banks. There are simplified banking licenses that are available to fintechs, or they can get full service licenses. And the nice thing about Europe is that it's a conglomerate of countries. And if you have a banking license in one of those countries, you can operate throughout the European Union. The market definitely took a little bit of a hit when the UK exited the European Union. The UK was generally the point of entry for fintechs into the EU. Now that has transitioned to Belgium and a little bit of the Netherlands, but it's very much still the same concept. They get their own banking licenses.
No, very, very, very interesting. And you do, I would imagine, kind of having that unique perspective, just as you're incorporating kind of some of your, I'll say, I wouldn't say necessarily day-to-day decisions, but as you're kind of thinking about the macro and thinking about expansion of just understanding how financial services works across the globe to bring those insights and see how you can maybe leverage best practices or things that you think are working other places that may be able to apply here, right?
Yeah, no, you 100% do, right? Especially, I think the best example of this is payments. Real-time payments have always been a thing in Europe. And when I moved to the States and I was like, wait, I have to wait how long to send money? It creates, you bring those use cases, right? Those things that you thought or you took for granted, you bring those things to the United States. And when you're in the position that I am, right, looking at fintech strategy and fintech products on a day-to-day basis, that is a good baggage to have. It's a good knowledge base to have. It just brings a different perspective and allows for maybe a little bit more creativity as it pertains to product creation.
No, good. No, thank you. Thank you for sharing that. Very interesting. As we transition to your current role, so as the head of partnerships, can you describe what does the day-to-day look like? What does the kind of the scope of work?
So the day-to-day is very much split into two buckets. On one hand, you're very much a firefighter all day, every day. You have to make sure that everything is running smoothly. You have to make sure that everyone is happy, particularly your partners and your regulators. I've always somewhat described this role as having three main buckets of people that you service. You have the internal people at the bank because you're the point of contact for everyone, right? Internal folks and your partners. You have your partners, obviously, they're your bread and butter. They're the ones that are advertising your products and that are bringing your products to market. And then you have your regulators. So it's always a little bit of a juggling act to make sure that everyone stays happy and stays on the same page. And really, the second part of the role is very much focused on strategy, right? It's trying to stay up to date with the current trends, making sure that the bank is not falling behind on the next trends, on the next products that are going to come out, and how we ensure that we're going to be able to service or offer those products. So it's a little bit of everyday management and long-term thinking, right? Which makes the job super interesting.
Yeah, it's never boring. So
Never.
I'll pull on kind of two pieces there. And the first is you talked about the working with regulators in the regulatory environment, right? And so can you expand a little more? Obviously, none of these programs are just set it and forget it, right? There's constant evolution in regulations as things are happening in the environment. So as you're working with your fintech partners and then also managing through the regulatory environment, can you talk about how you're not only staying current with what the requirements are, but then making sure that your fintech partners are meeting up to those expectations?
Yeah, absolutely. And I think it's an important question in the context of what's going on, at least on the financial institution side right now. How do we make sure that we stay clean and that we run extremely compliant programs? But I do have to say that the recipe for us hasn't really changed at the bank. what attracted me to Finwise even back then in 2018 when the business line was just getting started was the fact that compliance was put first and foremost. We're not a nonprofit. We are a for-profit business. So the revenue maximization strategy is here. However, it will never come at the cost of compliance, which I think a lot of financial institutions, somewhat miss the mark on. Yes, there is a ton of business to be had, but you have to be selective and you have to make sure that you're getting into the right kinds of partnerships. So, yes, when we saw all of these consent orders, it prompted the question of, are we good with those things? Are we sure that we're squeaky clean? And I think we somewhat came up, with the decision that we are, but we're always striving for improvements. We're always putting new processes and new systems in place to make sure that we remain, best in practice as it pertains to compliance. But if we're being honest, it's always been a little bit challenging to work with fintechs, in the context of bank partnerships. Fintechs are two things to a bank partner. They're a client, but they're also an extension of the bank. So if they're a client, you strive to maximize the relationship. You strive to maximize revenue, you strive to maximize growth, and you strive to maximize overall happiness. If you're looking at them as an extension of the bank, the same principles apply, but you do have more control over them. And I think this is the really critical, challenging part of those fintech relationships. How do you force a platform, and I'm saying force, loosely, but how do you require platforms to adhere to specific things because of your own risk tolerance when they may not be on the same page? So everything is always a little bit of negotiations, even as it pertains to compliance, because we may be coming from different perspective, and we have to meet somewhere in the middle. We have to meet somewhere where the fintech is happy, growth is maximized, and compliance is preserved. And as I said, it is challenging. I mean, we are financial institutions. We have stringent requirements that we have to live with, and unfortunately, or fortunately, those requirements also apply to the to the fintech. So, how that translates in practice is, the uttermost need for a trust relationship between the fintech and the bank. The fintech has to trust that the bank is not going above and beyond for no reason, and the bank has to trust that the fintech is doing everything as they've presented, right? So it is still a culture of trust but verify. We'll make sure that processes are being respected through reports, through testing that will get done independently, through audits that are done by third-party firms. We'll get reports on a weekly basis, on a monthly basis, even on a daily basis for some. And as part of those reports and all of this data that we get, we look for indicators that something is wrong. I'll give you an example. If, as part of your complaints or as part of a fintech complaint, we see that a lot of people are complaining that there's an issue with repaying their loans because the servicing platform is not great, is not user friendly, most likely, depending on the kind of volume of complaints that you're getting in that area, it is most likely an area of concern that the bank has to dive into. So we use all of this data that is provided to the fintech to make informed decision and to assess the risk of each partnership. And I'll somewhat wrap up my long answer with an advice for the banks that are looking to get into the space. It looks like an extremely attractive business. At face value, it looks like a business with high profit margins, low OPEX, very little risk, and that couldn't be further from the truth. I have seen banks that are setting up that kind of program with one compliance person. In this environment, it definitely does not work, and it did not work 10 years ago. You need to put in the right investment. You need to put in the right risk control and the right infrastructure to make sure that your fintech is being served correctly, your end user is being served correctly, and that you're staying compliant. And I think a lot of banks right now are missing the mark on this.
No, that's some really good insights, and as you describe, I mean, the kind of what I was listening is that the takeaway on that is, first and foremost, there has to be strong communication with your partners and your regulators, because you're right, making sure, is everyone interpreting it the same way, right? As you're describing, and so how are you having those conversations, and how are you discussing? And then the second thing I'm kind of taking away is just making sure that you're investing the resources. That if you're going to get into this business, don't understaff it, and don't make sure you're setting up with the right amount of resources to manage the risk, assess the risk, and manage the partnership. And and then that translates to, I'll say, then let me go to your second point you talked about earlier. Is you said, okay, first on the regulatory, and then you said there's a strategy component, right? So it's you have to decide, all right, who am I partnering with? And because of what you just described, you said, hey, there's a lot of work, there's a lot of investment you need to make, there's time. So finding the right partner. So how do you go about selecting who you work with, and is there a process to that? I mean, how do you guys think about that?
There is, and the biggest thing is that you can't be worried about saying no to a partner. You have to be selective. So the first thing that we look at when we are talking to a prospective platform is market fit. Is this a long-term product that is creating a need, or that is solving for a need in the market? There is a lot of startups, and it's not just valid for the fintech industry, it's valid for a lot of various industries that are a gimmick, candidly, right? So you want to make sure that the market fit is there. Then the second thing is the culture of the company and the leadership of that company. Did they run, I'll throw out a couple of things, such as, did they ever run into issues with regulators or law enforcement authorities? Did one of the previous ventures that they work at got into that kind of issues? So you look at the past of the founding team, the past experience of the key staff, just to get a sense of who they are and what is the culture that they're looking to create in the venture that is looking to partner with you. Then finally, expanding on that culture, you want to make sure that they have a culture of compliance and that they have the right compliance staff in place, which is sometimes challenging with very new startups, right? They may not have made the investment in the compliance staff. So maybe they're utilizing a law firm to fulfill that need. So, and if that's the case, you want to make sure that they have a plan in place to create that compliance environment in-house. They can leverage law firms if they want to, but they should have the staff internally. Once we're kind of past this first hurdle, we have a pretty extensive due diligence process, right? We want to make sure that you have strong financial backing. We want to make sure that if you're playing on the lending side of the space, that you have access to debt and you have access to equity if you're going to be financing everything yourself. We want to make sure that, depending on the stage that you're in the life cycle of your company, what you have put in place matches that. If you're a very established player, like Upstart was when Finwise partnered with Upstart, you're expecting to see quite a bit of policies and procedures, right? You're expecting to see that compliance environment already stood up. Mm-hmm. If it's a newly established startup, maybe not. So those requirements will depend on where the company is at in their life cycle. And then finally, the most critical piece is the onboarding process. This is when we work hand in hand with the fintech to make sure that all the right pieces have been put in place to stand up a Finwise product. There was recently updated guidance that was issued by the FDIC as it pertains to third-party relationships. So bank partnerships fall into this, where the FDIC is now asking the bank to have the right process in place to assess the risk of a relationship prior to entering into that relationship. That's a process that we've always followed at Finwise. So we feel very confident in the recipe that we've developed to select the right fintech partners.
No, it's good, and you have to be thorough, right? I mean,
You
it
do.
is any partnership you get into is a representation of your brand and an extension of your organization. So everything you described, definitely makes sense of why you want to make sure you're doing the amount of diligence that you described. So let me wrap. I always like to, as we come to the end, kind of three, I'll say quick questions. The first is, tell me, is there a tech or an app that you just right now you can't live without, that is just part of your kind of day to day, that is kind of your go to right now?
I mean, look, it's going to sound very stereotypical, but I don't think I could live without my phone, right? This is where I conduct business. This is how I talk to my family that's abroad. It's how I manage my finances. It's how even now it's how I pay, right? I honestly can't remember the last time I walked out with my wallet. I
Mm-hmm.
have my phone. It's enough to do everything. So that piece of technology, unfortunately, has become pretty critical to my life.
Yeah, you'll walk out of the house without you'll not bring a driver's license or a wallet or anything like that. But if you walk out without your phone, you're heading back.
Yeah, 100%. You feel naked without it.
Yeah, no. So my second question is, we're financial services. It's a risk based business. We all have to manage risk if you're in financial services, and so and sometimes you have to make internal risks for career or just kind of business decisions. Can you share an instance where you think you had to make a risk or a bold decision, and what did you learn? What was the outcome of doing that?
Yeah, so I think the biggest risk that I took in my career was to switch over to Finwise, right? When I started at Cross River, I didn't have that consideration of, is the bank small? Is it big? It was an internship, and I was very young, so I didn't have to consider those things. But by the time I left Cross River, it was a very established player in the
Mm-hmm.
space, right? And so when that opportunity came up at Finwise, it would have been, or it was, to go back to, very much being in the trenches. A lot has not been stood up yet. It's recreating a business line from scratch, and that was a risk. But I think it's somewhat what keeps me going in my career. I love being the guy that is standing up new stuff, that is trying to figure it out, that is deep in the trenches. It's really what I enjoy. So the switch to Finwise definitely solidified that I'm this guy that is super happy with new established company, and being a jack of all trades, as opposed to just being an employee number at a company as big as Bank of America, for instance.
No, yeah, you're looking at it. It sounds like you thrive in that fast paced environment. No, good to hear. And then the last is, any as we think about 2024, any bold predictions of what you think might happen in over the next 18 to 24 months?
I think we'll start to see an even more dramatic rise in the use of artificial intelligence. Um, Lending has somewhat embraced it already. I mean, a lot of marketplace lenders now use artificial intelligence based proprietary models, but I think we'll see it even more in other areas. I could see a tremendous rise in the use of neural nets for anti-fraud solutions, for instance, for KYC solutions that use extremely non-traditional data sources. Right now, if you're looking at fraud, or transaction monitoring, it is using financial service data. I could
Mhm.
see, neural nets being created that are pulling from news, that are pulling from social media, that are pulling from um, past usage across various financial institutions. So I think we'll see that, and of course we'll see the rise of artificial intelligence for more operational efficiency, and for improving the accuracy of the models that we already have in place today. And I'll wrap up with this. I could give you predictions all day long,
Mhm.
but I'll wrap up with this. I think big tech will eat at the market shares even more than they are right now as it pertains to fintech. If we look at Apple, I think it's a great use case of how big tech can try to penetrate that fintech industry. They started with an Apple Card. It was a partnership with Goldman Sachs. We knew that Goldman Sachs wanted to penetrate the consumer market. And, at first it was like, this is a natural evolution for Apple. But then it was buy now, pay later. Now it's payment processing, right? iPhones and iPads for the past 6 months have been able to process card payments on device. So I think big tech have seen that fintech is extremely interesting, and that there is a play for them, right? Amazon is another great use case. I mean, Amazon has been an extremely vocal adversary of interchange fees in the States. We could see a world where Amazon is creating their own payments hub. They may be creating their own neobank. Um, I think this will happen sooner rather than later. I don't think this is a multi-decade opportunity for those big techs. I think this is something that they're actively working on right now.
Yeah, you're seeing just different organizations cross like traditional boundaries of where you wouldn't have think that they would be doing business, but it just is financial services is becoming kind of ingrained in a lot of those components. So we'll look forward to checking back in and seeing on some of your predictions. Well, Simon, thank you so much for taking the time today. I've enjoyed the conversation, learning a little bit more about your background and your journey, and appreciate the insights today.
Perfect. Thank you so much, Ed. I appreciate it.